Hello guys, welcome back to my YouTube channel. My name is Andre and today we're going to go through trading news. So news can be CPI, NFP, PPI or Fed interest rate change on NASDAQ. So we're doing NASDAQ on the 15 minute today, NASDAQ on the 15, and we're going to look at news events, okay? We all know trading news is very risky, so I highly recommend making sure if you want to trade news. But if you want to trade news and you're one of those people that like risk, might as well take a calculated look at it and not just guess a direction based off what you feel or whatever. So we're going to look at some things today that might make you judge the news trades better or look at it differently. So there's one of two things you can do. One is you can take the trade when the news hits. That's a lot of risk, but there's a way to look at it. And number two is taking the trade after the news has happened and it calmed down a little bit. So as you guys can see here, three things to look at. We'll do a few examples to make this more clear, but it needs to take out a high first, or it needs to take out a high, it needs to take out a low, or it took out both and then you look at an order block. So let's go through that again, just to make it clear. It needs to take out a high, it needs to take out a low, or it took out both. So this is not the same thing. This is three different things to look at. And then obviously the fourth thing, but it's not really a fourth thing, is it comes back to touch an order block for a trade. That's the less risky one, okay? So this is the less risky one. Let's look at this NFP example on the 5th of January of this year, right? So I've got it marked out here. Now, important, if you want to go look at my previous YouTube video on London high, London low to trade, it's important because it will give you a nice range to look at. You guys will see what I mean. So I marked out the London high here and the London low over there at 12:45 and at 10:15. That was the London high, London low, okay? So what I mean with it needs to take out a high is before the NFP trade happened, it already took out the low at 1:30 South African time, okay? So this is South African time. I highly suggest that you guys go and look what it is in your time frame. But London opens at 9 in South Africa, so just go check what time London opens for you. And then 4 hours later, 1 o'clock is the last cutoff point for my low. In this case, 12:45 will be my lowest spot. And, 1 o'clock is there, so that's not my lowest spot there. 12:45 will be the lowest spot in this range. So you can see at 1:30, 13:30, it took out the low already. So now we know when NFP hits, we are going to need to go take out a high. So NFP hit over here, right? And it went down again. So there's no point in selling because it already took out the low. We know that we need to buy, but when do we buy? In this case, when it closed above the London low, you can place your buys for that trade. So that is the risky trade, looking at the London lows and highs. We know it needs to go up to go and fulfill the orders here at the top. So that is why I knew it was going to buy. And then for the comes back to touch the order block for the trade, the less risky trade, the normal trades, is when you mark out an order block after it broke this high. When it broke this high, indicating a change of direction, break of structure, all those things, you then mark out your order block there, and that is where your normal buy takes place. Or if you're not sure about it, it would have been there as well. Your normal buy take place over there. So now you guys can see what I mean with risky trade, less risky trade. Okay, so that's how we're going to look at things now. So let's go to a different example. Let's search for it. Here we go again. FOMC meeting minutes or interest rate or all those type of news events that happened. We can now see that at 9 o'clock South African time, this candle hit. This was the FOMC. Mr. Powell spoke about interest rates and stuff beforehand. Well, the important thing about FOMC is because it happens at night, it's basically just before Asian session. We are taking the high of the New York session and the low of the New York session, which is that candle over there. The 7 o'clock candle, South African time, and the 16:30 candle, South African time. Okay, that's when New York opened. and 4 hours later will be 7 o'clock. Okay. I mean, if you want to, let me just double check. Yeah, 7 o'clock. There we go. 7 o'clock from 16:30 till 7 o'clock. Okay. So what happened was it went and it already took out to the low afterwards. It took out the low afterwards. So like I said, when it already takes out the low before the meeting, we know it needs to go take out the high. And for it being so close to the London low, you might have expected something like a tap again and then up. But in this case, it just went up, which is a nice place to place your buys because it already took out the low. It needs to go out and take out the top, the high over there. Let's go to another example. So CPI, we've got the low and the high of the London session. It was at the top. We're not going to buy because it's already at the top. We know it needs to go take out the lows, okay? We know it needs to go take out the lows. So it came down and it took out the lows over there. But this is a very risky trade. I'm not going to lie. And I wouldn't personally take this trade. Because where would you enter? There was no retest underneath there for the sell. Here's a retest for sell. So you could take the sell down there. The retest at the bottom of the London low. But I would just wait to find an order block. Buy or sell. So when the news calmed down, it came back up, retested the bottom for a buy, but I wouldn't take that. It went above the London high again, came back to retest the order block. There would be your safe entry. So it depends what type of trader you are. Okay, let's go again. NFP on the 8th of December 2023. It already took out the low of the London session. We know it needs to go take out the high. Yes, it retested at the bottom here for a quick sell. You're more than welcome to take those risky quick sells because it already retested the bottom. But we know it needs to go take out the high. So how are we going to look for these buys? It came up, retested the low closure, retested the low over here. And you can then take the buy from this point upwards. And if you're a less risky trader, put in your order block there, broke the high, came down to retest this order block over here for your buy upwards. So you can now see different types of traders, different types of entries, different types of risk management. Okay. So let's go and look for another example. Same with PPI. It was at the top. It already broke the top. So it already fetched liquidity at the top. Now we know it needs to go take out the bottom of the London low. So there you can see the retest after bottom for risky traders. Retest there to go and take out the bottom for your TP, or just to know that it's going to go at least until there. Very, very risky traders can just start selling as this is going up because they know it needs to go and take out this bottom anyway. But that's very risky and that's not how I like to trade. But I need to cover the basis of how everyone likes to trade. Okay. Unfortunately, there was no break of a low and a retest of an order block. Maybe on a higher time frame like the 30-minute. This would be an order block for that retest over there, which is valid, still valid. You can trade on any time frame you want, but in my case, on the 15-minute, I probably wouldn't have caught that trade. This PPI, I probably wouldn't have caught it, but just look at how it always goes to take the bottom when it already took out the top. Here we go with CPI. On Tuesday, the 14th. Okay, so it already took out the bottom before CPI at 245. So we know it's going to go up to take out the top over here. Yes, it retested the bottom again, but that is only a 200 to 300 pip candle wick pattern there, which is fine. Your stop loss would have probably handled that because I always say put your stop loss below the lows with a little bit of breathing room. But that was the indication again. The fact that it didn't take out the top is an indication that it was going to go up. Unfortunately, there wasn't a order block retest for the less risky traders. Okay, as I told you guys previously, when it already took out the top and already took out the bottom after the London session, then you only look for order block retests. So it took out the bottom here just before NFP. And it took out the top just before NFP. In that case, we only look for an order block. Because it took out the top last, we're going to look for a buy. And there you can see the order block retest just before NFP. And you can safely place your buys, knowing that it already took out the bottom and the top. And it already did an order block retest. That is probably the best trade you can see in terms of a news trade. Also, there's another high there, probably around the start of the Asian session. Sorry, guys. Probably at the start there, which was also an indication of it needing to go and take out the liquidity at the top there for the buy. So this is a very clean trade for the buy. Order block retest, already took out the bottom, already took out the top beforehand. Nice trade. FOMC. So FOMC happened here at 8 o'clock South African time. It already took out the bottom of the New York open time, the New York time. Already took out the bottom. It hasn't taken out the top yet, which is this candle over there. Now you can see when it goes down in this late session, it still needs to go take out the top. You are then relatively safe to take buys here at the bottom of this New York low. So that's fine. Nice buy there. So as you can see, each example I've shown you guys, it always goes to the direction where it needs to go and grab liquidity at the high or the low of the London or the New York session. Okay, NFP again. Took out the high already over here. Okay, took out the high. There, 13.15, took out the high. So literally 15 minutes after the high of... Sorry, this was when daylight savings was an hour earlier. So this was from 8 till 12, the London session. The London session was from 8 till 12. So it already took out the high. So we know it needs to go take out the bottom over here for the sell. Relatively safe. You can still put your stop loss just above that red line around there or above this high. And you can put your TP on that low over there for a great trade. So as you guys can see, it always goes to the direction of the low or the high that wasn't taken out yet. The question is, do you want to take that trade? Do you want to take that risk for the entry that might have a little bit of a drawdown? If you're that type of person, then you can do it. If you want an order block retest, you can do that as well. So yes, thanks for listening. I hope it helped. Let me know in the comments what you guys think of this. Go do some back testing, especially NFP, CPI, and the interest rates. Those are the best type of news trades to take if you're one of those type of traders. But I hope this helps. The fact that it always goes to the London low, London high, or the New York high, or the New York low. Great strategy that you can use if you're a news trader.